Good afternoon, greater Philadelphia area. This is Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Sarah Tymon. And again, we both work with the Tom Toole Sales Group at RE/MAX Mainline, the number one RE/MAX team in Pennsylvania and Delaware since 2018. And we've got an exciting guest coming on today. We got some real estate stuff to talk about as always. So Sarah, why don't you let us know how your week's been going? I mean, fill us in. It's been kind of a interesting week in the market here, right?
Yeah. It's definitely it's off to a big start here. Lots of showings, stuff coming available, and a lot of activity.
So we'll hit on that a little later in our second segment when we talk about what's going on with Wells Fargo, because I think that's indicative of what we're seeing. But what we want to start with first is that every year, and again, we're streaming live on Instagram, Facebook, YouTube, just Google Tom Toole Sales Group. Every year, Stefan Swaenpol, he runs an organization called T360. They kind of like rate the real estate brokerages and kind of assess who's who in the real estate industry. And they come out with a top 200 influential leaders in the real estate industry. And the list dropped last week. Number one was Gary Keller, co-founder of Keller Williams. And I think now he's like chairman of the board after serving as CEO. Glenn Sanford was number two with EXP Realty. Ryan Schneider, CEO of Realogy, who runs companies like Coldwell Banker, Century 21, was number three. Gina Blafari, who I know, I actually know this guy, so that was exciting. He was number four with Home Services. That's Berkshire Hathaway. Compass CEO was number five. Rich Barton, number six from Zillow. So on and on and on, right? So what I wanted to get from you, Sarah, is that I think there's trends that I see more so than who's who, because all these people are pretty influential, right? Like it's not. I don't think there's a big difference between one and three in terms of how influential they are. It just might be who's more influential at the time. So what do you think about this list, and what do you think it sums up in terms of like the state of the real estate industry right now?
I think it's kind of pointing towards good leadership, and just being able to come through this last 2 years. I mean, I know the rankings here is just for the past year, but being able to pull through this pandemic and keep things moving. I think it had mentioned that like Gary Keller, like he wasn't in the news for a ton of crazy things. He just kept things going steady, and kept people growing and people on pace.
That's a great observation. And Gary Keller, when the pandemic hit, I mean, he was pretty clear coming out and saying that, hey, you might think you can go all digital all the time, but guess what? It's not going to go that way. And I would say we're seeing that more now than ever, especially heading into 2022. So that's a great observation. What I saw here were a couple things. One, this is a little crazy to me that this list came out, and then Adam Contos resigned from the CEO of RE/MAX last week, and he's number 9 on the list.
He was on
so
it.
Obviously they weren't in the know. So I mean, might need to throw him out of there, which I thought was just interesting in general. And I've got some other thoughts about that we can talk about in a little bit. What I see here though is I know last year was very tech heavy in like the top 10 or 15, and this year you really have. Zillow's the one tech company I see up here in the top 15. And then also CoStar, that guy made the biggest jump on the list. He went from, I think, like number 96 last year up to number 15 because they bought Homes.com and they've basically declared war on Zillow. So that tells me that, and Stefan's a smart guy. If you don't know who Stefan Swaenpol is, he's like the most unbiased person ever, and comes out with a report that's like hundreds of pages thick about all the brokerages in the country, everything else that's out there. So I think that's some foreshadowing that we're going to see some sort of, I don't know what's going to happen with those two companies, but everyone's kind of anticipating this like war of them going at each other, and that's a pretty good observation by Stefan there. So and any other trends you see coming out of the list, anything in particular that jumped out at you, Sarah?
Well, I mean, it was interesting that Rich Barton with Zillow went from number 1 last year to number 6. I mean, obviously he's still very high up in the rankings. I think probably the iBuying had something to do with that drop.
You think?
Although he still comes in one ahead of Eric Wu with Open Door, who they do a lot of iBuying and have part of that market cornered. But I mean, I would say that drop definitely jumped out. But yeah, a lot of the top people here seem to be appearing, as you had mentioned, not as, I mean, a lot of them, they use tech, they're very ahead of the trends, but, for leadership and for, for really being able to pull through.
Well, and you look at what's happened in the real estate industry over the past 18, 24 months, and a lot of that is a lot to do with the leadership of these companies, because we've seen that, that there's a lot of these companies have had, there's been some disruptors in there. You call Redfin a disruptor to a certain extent, maybe a little bit of a tech company because their website's so great. But you also have disruptors like Compass, EXP. Those are people that are coming in and really pushing the envelope for what we've seen in terms of agent recruitment, different ways to compensate people. So I thought that was pretty interesting. One thing I got to say here is I don't understand why there's no team leads on this. This is all about companies. And I would argue that some of these companies, once you get like down the list, like not the first 10 or 15, and there's some other people on there, like Tom Ferry's on there, and there, some of like the Boomtown CEOs on there, and some of these other like the MLS CEOs. I am surprised there's not more team leads on here, because some of these brokerages that they're putting on there, they actually kind of run like a team. I don't know how you include a list that doesn't have one team leader on there, given the trends in the industry. Am I off base here? I might be a little biased. I'll be the first one to say that. But taking that piece of information, Sarah, process that a little bit and let's react.
Yeah, I think that so it said earlier in the article that they spent like 500 hours,
yes,
I believe, digging through to pull these different names. So I would think when you're committing that much time to it and looking at it in that much detail, it would be pretty apparent that some team leads are, really hitting the mark and pushing things ahead above of, maybe who they're ranking on here or what higher up people they're mentioning. If you kind of whittle it down and really look at it, I think the team leads really push the envelope, and, I'm surprised that there aren't anyone there.
Yeah, And the reason I say that is I'm not obviously these brokerages and a lot of them, they're smaller brokerages when you get kind of down the list. But they have companies like AdWorks on here and Commissions Inc. and then some of the more boutique brokerages like Hilton and Highland out in California. So at Boomtown's on here, another tech company, Inman News, all those places. I don't get that you can say these are the most influential people. There's got to be one team lead that's going to crack the top 200.
Right. I wonder if they just kind of ruled that out as a category that they were even looking at.
Let's see what the list says. So, I don't know. It doesn't really give us a lot of good information. But so while we're looking at that, let's also look at kind of last year's list and the changes, right? So Ron Peltier, he was number one in 2020, not 2021, and now he's obviously been replaced by Gino Buffari. Rich Barton was number one last year, dropped down to number 6. Gary Keller was number 2. So, you're kind of seeing that it's kind of the same people over and over again that are kind of going in this top list. But, I just don't get, I don't understand what makes someone number 1 versus number 2. I get why Zillow dropped, but, I'm a little more tuned into this than you are. So, how do you think they actually come up with this? And would you say that some of these people are actually, you would rank them ahead of each other or just kind of put them all in one group?
So I would assume that they're looking at a couple different areas, and maybe one of them just being like headlines and some clickbait stuff. Not that would, put them up to number 1, but probably like how often they're appearing in the news, whether or not they are, in a fight with another brokerage or, production, I'm sure would have to have something to do with it. And as far as the tech people that are getting in there, just if you're innovative and have put out some helpful tools over the past year.
So here's how they come up with the legend of this. So it's either a brokerage or a franchise, organized real estate. I'm not sure exactly what that means. Tech services, other services, the watch list, and outside influencers. So I would imagine there's some team leads that could probably filter in there, and then they have 8 criteria that they look at here to determine all this. So, this is kind of more of like a who's who than anything else. You go through and look at like the watch list or the outside influencers, but they do have. Here's the criteria guidelines. So I want to kind of get your take on this too. So They have kind of different rounds of what they look at here. So the first is that they do an initial cut. They look at prominent leaders and C-suite executives of large brokerages and organizations that support and serve the residential real estate brokerage industry. And you have to get nominated, and it's about 3,000 people. Then, in round 2, they review each of these, the office that the person holds and the decision-making power of the office. So this makes a little more sense now. The tenure with the company and tenure in real estate brokerage industry. So you can't just be in the real estate industry for 40 years, which makes a lot of sense for a lot of stuff we talk about. The size of the organization, the financial resources of the organization's overall significance, scope, and impact, large initiatives, expansions, acquisitions, and other noteworthy activities, and other leadership activities. And then they go through and verify everything like 5 different times. They call it triple checking. So okay. I guess that makes a little more sense that why there's not any teams in there. So what do you being someone that's in the industry, and then we can kind of move on to our next thing here while we wait for our guests to come in, is, what kind of stock do you take in this, right? I mean, you're an agent, right? You're on a team. I mean, you've been doing this a few years now. Are you like, wow, this is like really impressive? Like, what do you see as someone inside the industry, or maybe as an outsider a couple years ago, if we were to talk about this?
I mean, I would say it's relevant. It's good to look through and see who's being recognized for what. I mean, as far as it like trickling down to affect any way that I'm actually running my business or working with my clients, I don't think there's a direct impact there, but it is, I think it's a nice way to recognize who's been doing what throughout the year, and, kind of highlight them for achievements that they've hit or ways that they've improved things throughout the year. And I mean, I'm sure especially over the past couple years, just with how difficult, many aspects of everyone's job has been, it's got to feel good for these people who are getting recognized for pushing through and for making improvements or helping out other realtors and pushing things along.
So this year, 23% of the list is made up of women. Now, last year it was 19%. So I think that's a real positive, seeing more women leadership, especially in real estate, where there's more women in real estate in general than men. And that number comes from, it's 67% of NAR members are women. So, I'm glad to see more women leadership. I think that's really critical. And that's one of the other takeaways that I have, is that unfortunately that's something that has to be constantly evaluated. Mm-hmm. I do like that they're including some of these like up and comers and who's coming up the list. I still don't get how Adam Contos is on here. They didn't know he was resigning. I mean, that just blows my mind. And so otherwise, what this tells me is that the same companies are in play here. There's the same players. I don't think anything's really changed, with the exception of CoStar emerging as a real tech threat. Mm-hmm. That's the one thing I see here that could end up empowering consumers with HomeSnap and everything else. So anything else you want to add on here?
No, I guess just it is interesting. That's great that more women are being recognized here, but the first woman to appear on the list doesn't pop up until number 10.
I agree there. I think that's kind of an issue, and a lot of these guys I think hold on to their jobs too long. I mean, Gary Keller. He's been like retiring for years now, right? And then he doesn't like the way it's getting run, and he takes the job back, and I think that that's the sign of a company that may not be able to stay great for a long time, because they don't have leaders in the queue coming up here. So I do agree with you there, because it's basically the same guys who were on the list last year. Right. Now it's and now I know the woman who runs Howard Hanna, her is it Hadi? I don't even know how to pronounce her name. She's been with that company a long time. So it's good to see, and they're a pretty large brokerage. But then besides that, then you see Susan, the president and CEO of Realogy, and then you see some other people kind of pop up here down the list. Susan Daimler, from the president of Zillow Group. So there are some people that are kind of emerging, but I think that's something that, given that 67% of agent or of the NAR members are women, you'd hope there'd be more women that make it up this list in the future.
Right. Well, and it is also interesting that for the number 10 here with Helen Hanna, it specifically, is mentioning that they picked a bone with Compass over recruiting tactics. So I wonder if that is something that pushed them up higher, or I just thought that was interesting that was included in there for their little bit.
I mean, there's a lot of people that picked a bone with Compass on recruiting.
Right.
I mean, there's a couple lawsuits going on. I mean, that's a whole other thing that we could have a whole segment on that. So,
Sure.
and it actually says in Robert Refkin's that they've incited many rivals of the way they've recruited people, whether it was Keller Williams, EXP, Realogy. I mean, there was a lot of people and for good reason. I mean, they were. The lawsuits allege that they were being told to violate their employment contracts. So, I mean, I don't think that's a good... I mean, that's a whole can of worms that we'll unpack another time. So that might be a good spot to break here. What we're going to do, we're going to take a quick break. We're going to come back. We're going to talk about some news coming out of Wells Fargo about their mortgage production fading. And then we'll come on and have Vince Pagano come on with Pagano Tax. He's going to give us some tax advice in regards to the real estate world. This is Toole Time Real Estate Radio on WWDB 860 AM.
The real estate market is red hot. Have you considered taking advantage? Call the Tom Toole Sales Group at RE/MAX at 610-692-6976 or visit our website, tomtoole.com, to connect and take advantage of these market conditions.
When you're getting a mortgage, you shouldn't have to sacrifice great service just to get a great rate. At Mortgage America, we've been lending with this philosophy for over 35 years. We have access to great low rates without the complications and delays of big or online banks. We're a local Pennsylvania lender with loan officers that you can actually meet. As PHFA's #1 lender, we specialize in all residential mortgage programs, including first-time buyer programs and low down payment options. For your free pre-approval, call us at 610-439-8000 or apply online at mymortgageamerica.com.
Mortgage America is an equal housing lender, NMLS 128501.
Buying a home or already own one? We can help. I am Kevin Hamill from Alliances Insurance Agency. If you haven't reviewed your policies in the last 3 years, now's the time. New home buyers, there are a number of ways that we can help you get to that settlement table. Call us to find out more at 610-816-0043, extension 3, or visit our website, alliancesinsurance.com. Don't forget the S, it's for savings.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit tomtoole.com. Join our team, the Tom Toole Sales Group at RE/MAX Main Line.
Welcome back to Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Sarah Tymon. And again, we work with the Tom Toole Sales Group at RE/MAX Main Line, the #1 RE/MAX team in Pennsylvania and Delaware since 2018. And the show is streaming live on Instagram, Facebook, YouTube. Just look up the Tom Toole Sales Group. And what we want to talk about next here, before we get to our third segment with Vince Pagano from Pagano Tax, and he just texted me, so I'm glad he's on his way because I always get nervous that we're not going to be ready. So Wells Fargo had some news drop about them, and they were the biggest provider of purchase loans. And last year, they made 27% fewer loans to home buyers. And I mean, this is pretty shocking news to me because, and that was an 8% fall in production. So even though it's 20% less, it was an 8% fall in production because it was 27% fewer loans. And they also closed 270 branches and laid off 1,600 employees to cut costs. So what do you think about all this, Sarah?
Yeah, I mean, those are significant numbers. So it goes on to kind of talk about, while these different cuts have been made, they are still going to rely heavily on their franchises in order to keep business moving forward. I think it does speak to people using local lenders more now than maybe they had in the past. When you rely on big banks, when you're trying to get to the settlement table, a number of different things can pop up throughout that with a smaller lender tend to go smoother, and with a local person who knows the area and knows what's going on. I think oftentimes with these big banks, you are just kind of a number in there, and they're working through all of the different pieces. But with a local lender, I've just found them to be able to maybe rate shop a little bit more, or use some of their local knowledge to know what needs to get done in different townships and different areas to kind of overcome hurdles before they become a huge problem that then you're tight on time and you're in a crunch.
I could not agree with you more on this. I mean, this has been going on for years where I know there are tons of agents in the industry where they say Wells Fargo is the worst. Like they'll literally say that. And there's a couple problems that we run into. One, a lot of them are on the West Coast. So you have this like 3-hour delay, which is why agents should never schedule a morning settlement ever for this very specific reason. But even with that in mind, is it's such a segmented process. And meaning that your application gets taken by one person. Then they say, well, I sent it to the underwriters. And then the underwriters are like these mythical people that don't exist that you can never get a hold of. And ultimately what happens is like they blame it on them because the left hand doesn't know what the right hand's doing. They can only go in the system and look at it. And it's a whole issue. So this to me is consumer pushback on why because there's more homes that sold last year than the year before, right? And you know what I know is that anytime we've had like one of these big banks, and you could put them all in the same category if you ask me, Bank of America, Chase, Wells Fargo, and I'm sure there's some great people that work at these places. This is not a people problem; it's a systems problem. And as a result, we work with a lot of local lenders. You can actually talk to somebody on the phone. You can actually get them to answer the question, and and they see the gray area with these loans sometimes because. Even with some of these jumbo loans that a lot of bigger banks kind of specialize in, they don't see the gray area. They don't understand things and they can't process it appropriately. So to me, this is a big deal that it's and I think you're going to see more and more of this because the consumers are demanding better right now from the lending industry. So knowing that's the case, and I would also say there's probably a lot more competition too. I mean, look at what Rocket Mortgage is doing right now. I mean, they're really pushing to overtake Wells Fargo as number one. So there's a little bit of that going on too. So,
well, and touching on that also, I mean, in terms of getting answers, when you're in some of these transactions, like no matter what stage of it that you're in, there's deadlines that you need to hit. So even if it, you're not settling for several more weeks, if there's stuff in flux there, you need answers and you typically need them quickly. And what I found with the big banks is typically you're reaching out and maybe you do have a contact who is getting back to you, and again, as you said, it's a systems problem, not a people
exactly.
necessarily. So, they are getting back to you, but they're not hearing back on the next piece. And so many times it's come to now my manager has to get involved. But the amount of time that has to go by until the manager gets involved, you're wasting hours, days, and then if you come back with an answer that isn't a good one and more work needs to be done or more issues need to be figured out, and there's, different steps that are now getting added to this, you've wasted time. And that's what you can't afford to waste in a lot of these transactions.
Well, think about, I mean, there's a couple offshoots to that point. One is what these mortgage companies, they don't seem to care about is that people have like movers lined up and they have all these things scheduled, or let's say they're just late getting you the mortgage commitment letter and they don't think it's a big deal. What these guys don't realize is that if you miss that mortgage commitment date in Pennsylvania, the seller can terminate the agreement of sale. So you're buying a house, you and Eric, right? And you say, we're going to use Wells Fargo. We got a friend there, and they don't deliver the mortgage commitment on time. And let's say the seller got a backup offer, right? Inventory's tight. This is a very real scenario. And all of a sudden, I have to call you as your agent and say, hey, Sarah, I got some bad news because your lender missed a date and we didn't get an extension signed. You've now lost the house and you're out of the deal. How are you going to feel about that?
I'm going to be pissed.
Yes, I would imagine, right? And so that's what a lot of people don't get, that there's real-time repercussions, and the lenders just don't seem to give a crap. I mean, that's real. They just say, oh, well, we're working on it. We're getting to it. It's in the underwriters. There's no, let me accelerate this, or they don't have the ability to. And that's one of the reasons why I'm clear a lot of consumers have gone away from big banks like this.
Right. Or it's very lackadaisical of like, oh, we'll get it to you tomorrow, blah, blah, blah. And it's like, no, like, it's due today. So now if you're not going to have it until tomorrow, then I need to send out a change in terms and I need to have it all signed off on that this is the new date, or else, we're not within the contract. And then if the next day comes and they don't have it, like, you can't just keep on sending extensions because that pisses people off as well.
Well, and some sellers might say, hey, you know what? We had a better offer that came in after we signed with you guys. Or they're sick of it. I mean, there's so many emotions that come into play here, and the banks don't think about that stuff. So that's been a big miss for these larger banks. Then closing on time. I mean, arranging movers, or maybe you're selling your house in the morning and you might not have a house to move into. I mean, this is the stuff that happens. So, I'm not surprised by this. I'm glad to see the consumers actually push back and pull their business from banks like this, because that's really the only way to send the message. It's like when other stuff's going on, you either have to get involved at a local level or do something else, which most people don't want to do. So the consumers actually did the right thing here. Wells Fargo will be fine as a company. I mean, they're still doing well with the non-conforming jumbo loans, because a lot of the smaller banks don't do those, or they're not as competitive on the pricing. So I would imagine you're going to see more of this news coming out of some of these larger banks, because there's a lot of competition. Rocket's making a big push to overtake, and Rocket's another crappy lender. I mean, and they're not any good. They just have the infrastructure and to be able to compete on a high level, and that's the reason why they're able to take up so much market share. So what questions should buyers be asking their lenders? This might be a good way to kind of end this here. Knowing that there's companies like Wells Fargo that are still out there. You've been through this. I've been through this. What should they be asking their lenders, and what should they be avoiding or it's like some red flags they might see when they're interviewing lenders to do the mortgage app?
Well, I think one important question is going to be what are their hours? What availability they have? If you're in a pinch and it's Friday at 8 p.m., is anybody going to pick up? So being clear on working hours and, what to expect in terms of response time is pretty important, because if all right, what X comes in, I'll get back to you within 2 hours or something like that. Then you're not sitting there wondering the whole time, because when you're in one of those situations, every minute feels like an hour.
Yes,
so
yeah.
Being clear on, as information comes in, how quickly can I expect a response? What type of time frames are we looking at? I would probably want to know their success rate with getting things to settlement.
Great question.
And read some reviews, because pissed off people are some of the first ones that go in and write stuff. If you go and read reviews for people, as well as very happy people. So
yes.
I feel like you can really get a good feel if you go in and kind of read customer testimonials, because that's going to speak true for people that went through the process and worked with that individual.
Great point. So right now, just as they have a 3.5 star rating on NerdWallet and a 3.8 star rating on Wallet Hub. I don't know what these websites are. Consumer Affairs 3.6. So it seems pretty accurate for what you're saying. So that's really good advice. I love the communication question, because that's the biggest problem is no one knows what's going on, and you can never get a call back, or you get an email that doesn't answer the questions. That's usually how it works. They send you something that's nonsensical, or it's,
right,
hey, we're working on it. And it's no, I need these questions answered by when. It gets really frustrating. So my advice would be just avoid these guys altogether and go to a local lender.
Yeah.
You get appraisers that are local. That's another issue we didn't even talk about here. You're not getting someone from Bucks County coming down to Delaware County to do an appraisal, or from Philadelphia to Chester County, or whatever else. So local lenders typically solve for a lot of these, and that to me is where the consumer's going, and that's because they're getting better service. It's not a fragmented process. So I think buyers have reacted to this and said, hey, we're not doing business with you anymore. It's been the biggest thing I've seen.
Yeah, and I think it's important for consumers to know that you can shop around for this.
Yes.
You have a say in who your lender is. You don't just have to. And if you spoke to one lender and got a pre-qualification, or had gone through part of the process with them, that doesn't mean that that's who you have to stick with.
Yep.
You have time to switch over. So you have a say in what happens next, and this does impact the transaction more than you may think it does at the beginning.
Well, and the way things have gone over the past 24 months, we'll call it now, or however long it's been, is that there's been a few things. One, it does impact the transaction because everyone is trying to rush to the table, and they don't have clear expectations, because a lot of lenders just yes you to death, and they say, okay, yeah, we'll close in 25 days. Don't worry about it. We'll close next week. It's fine. And they're like, oh, wait, we got a problem. And it's the classic overpromise, underdeliver, which just pisses everybody off,
right.
Number one. Secondly, there's so many moving parts. Third, you can lose the house if you miss deadlines. Mm-hmm. And I'll go one step further in that, with the way things have gone with these banks, is that ultimately, the buyers just want certainty. They want to know when to plan. They want to know what to expect. And for these people that just take orders over the phone, it does create a lot of problems. And there's no relationship there. You can't get that person on the phone, which in as digital of a world as we've moved into, people still want that personal reaction. They want that human reaction, and they want some sort of like physical enhancement, which is one of the things these larger lenders struggle with because they can't get the person on the phone. I mean, I'm not talking like physically meet them, because most of the times you don't meet the lender, but
Right.
that interaction where you know what's going on, you can ask 5 questions and handle it in a 10-minute phone call versus
Having to start all over with, hey, so this is my situation, and go through the whole story. Yeah, they want accountability. They want to be able to go back to the person that talked to them yesterday and said, this is the plan, and then go from there.
Totally agree. And then the last point you mentioned about shopping around, what everyone should know is that in Pennsylvania, when you file, you have 7 days to file your mortgage application in the agreement of sale. That's after you execute. You can't shop or even lock in a rate until you have an executed contract. So you can certainly shop around before if you want, but I don't really see the point, because you're not getting real numbers. It's like, well, if the market moves tomorrow, then your rate's going to change. Right. So there's that 7-day window, and you don't want to mess around with that too much, because I've seen a lot of people try to outthink the market or maybe hope it goes down. My view is lock in when you feel good. Make sure you're making a good decision based on the lender, and look, ask for a cost sheet or a cost estimate. I don't think it's anything that unreasonable to ask for.
Sure.
All right, so we're going to cut it right there. And we got Vince Pagano coming on next. We're going to talk about real estate, taxes, all sorts of important stuff here. This is Toole Time Real Estate Radio on WWDB 860 AM.
The real estate market is red hot. Have you considered taking advantage? Call the Tom Toole Sales Group at RE/MAX at 610-692-6976 or visit our website, tomtoole.com, to connect and take advantage of these market conditions.
Buying a home or already own one? We can help. I am Kevin Hamill from Alliances Insurance Agency. If you haven't reviewed your policies in the last 3 years, now's the time. New home buyers, there are a number of ways that we can help you get to that settlement table. Call us to find out more at 610-816-0043, extension 3, or visit our website, alliancesinsurance.com. Don't forget the S, it's for savings.
When you're getting a mortgage, you shouldn't have to sacrifice great service just to get a great rate. At Mortgage America, we've been lending with this philosophy for over 35 years. We have access to great low rates without the complications and delays of big or online banks. We're a local Pennsylvania lender with loan officers that you can actually meet. As PHFA's #1 lender, we specialize in all residential mortgage programs, including first-time buyer programs and low down payment options. For your free pre-approval, call us at 610-439-8000 or apply online at mymortgageamerica.com.
Mortgage America's equal housing lender, NMLS 12850.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit tomtoole.com. Join our team, the Tom Toole Sales Group at RE/MAX Main Line.
All right. We are back on Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Sarah Tymon. And we have Vince Pagano here with Pagano and Associates, Accountants and Advisors out of Chester County. Vince, thanks for coming on, my friend. Really appreciate you.
Yes, thanks for having me.
After having to navigate the high security here at WWDB, he made it into the studio. So, and again, Sarah and I work with the Tom Toole Sales Group at RE/MAX Mainline, the #1 RE/MAX team in Pennsylvania and Delaware since 2018. And we wanted to have Vince come on for a lot of reasons. One is people are listening. They may have bought a home last year. They don't know what the tax implications are, the benefits are. We'll get into all that stuff. But first, why don't you tell us a little bit about yourself, Vince, how you got into accounting and advising, and just what your business is all about.
Yeah, I'm originally from Michigan. I went to Michigan State University. That was about 15 years ago now. I practiced public accounting, CPA. I've been doing that since then. I do taxes, primarily taxes, corporate taxes, business taxes, personal taxes. Kind of all of the above. I have a beautiful wife. I have 4 kids. Yeah, that's a little bit about me.
4 kids. That's like new vehicle territory when you have that many. Oof.
Yeah, we had to have an Expedition, which that was wasn't planning on having a car that big when I was younger.
I gotcha. Sure. Well, very cool. So you do a lot of tax returns in public accounting, and I think the first question, there's people that probably bought a home last year, or they sold a home, and they don't even know what that's going to do for their tax return. And I get surprised by this every year because we actually I'll send an email out to our clients, send them their settlement sheet, let them know that, hey, you need to bring this to your accountant when you do your taxes. If not, we can refer you to an accountant. What do you recommend for someone in that situation? Like, what should they be thinking about if they did a real estate transaction in 2021?
Yeah, I mean, I guess primarily the settlement sheet. I mean, there's a lot of pertinent information on there as far as real estate taxes paid at closing, whether or not you paid points, any origination costs. Those things are all deductible. And then obviously, if you don't know, you can ask an accountant, CPA. Those are the primary things, I guess, to keep in mind. I mean, especially when it's a primary residence. So, yeah, those would be the primary things.
Awesome. And if you want to get in touch with Vince, his website is paganotax.com. It's Pagano tax.com. So what are some of the tax benefits about owning real estate? Because Sarah and I constantly talk about affordability and the financial benefits to buying a home just versus renting, for example, from a wealth building perspective. But I don't think enough people realize that there's a lot of tax benefits involved as well.
Well, yeah, I mean, right now there is some limitations on what you can deduct as far as a homeowner, but really the primary things are real estate taxes paid, which they're capped at $10,000 right now, and then your home mortgage interest. So those are deductions, and then if you're somebody who gives to charity or has medical deductions or something like that, you may be able to itemize. So you may actually make out better owning a home than versus renting.
Got it. And I mean, I think there's even a little more to that because then you're paying someone else's mortgage and their taxes.
Well, I mean, when you get down to the finances of it, I mean, it really, it makes a lot of sense. I mean, it doesn't make sense not to own a home, really.
Very cool. So, I mean, this stuff's I know these are some basic questions, but there's been some changes to the tax codes over the past couple years. So, what should people getting ready to file for 2021 be thinking about? What's some good practices for them when they're getting ready to file their return? Because a lot of people, I always classify it the people that use discount realtors, they're usually the ones that use TurboTax, and they're probably leaving some money on the table in terms of what they can write off, or they're paying too much in taxes. So for someone that maybe has done that on their own, they've had a change in income, or they own a home, or something's happened where it's really important they get in touch with an accountant. What are some flags there, and what should they be aware of filing their returns?
Well, I mean, for this year, the biggest things are, the child tax credits, which came out. They're very confusing. A lot of people got advance payments, so you need to make sure you got a letter from IRS that said how much you received. So you would need that when you file your taxes. That's something new that you would have never seen before. The other thing is related to the economic impact payments, which are the advance payments, the stimulus payments. So the same thing, you will get a notice from IRS that says how much you received, so you will need to have that to prepare your tax return. Those are some of the main things. And then, as far as new changes, there's a new dependent care credit, which has been extended for a lot of people. It used to be capped at $1,200. For 2021, it's actually up to $8,000 for 2 children. So if you had any children that were in daycare or something like that, that's something to keep in mind because that credit has gotten way better for this year. Those would be the main things. Those are the main changes. The other thing is there's a charity deduction. Which is allowed to all individuals. So usually you have to itemize in order to claim charity. But for 2021, there's also a special law where if you're a single taxpayer, you can deduct up to $300. Married, filing joint, you can deduct up to $600.
So you got some good deductions there. That's really important to note. What about someone that maybe they filed for mortgage forbearance or they took advantage of some of the pandemic programs? Are there any tax implications associated with those? I mean, I think these are questions that I don't know that people even maybe people don't know yet.
Well, I mean, as far as tax deductions, I mean, you're not going to really have any
or tax impacts.
Yeah,
I should say.
I mean, you're only would have a tax impact to that is if it was completely forgiven. So if it ends up being completely forgiven by the mortgage company, then you would have to pay tax on it as if it was income.
Okay.
But yeah, I don't foresee there being any issues other than the fact you lose the deduction, You're not going to have the deduction.
And would that be the same for, people that are deferring payments for, let's say, student loans?
Yeah, student loan forbearance is sort of the same thing. And then, I mean, student loans are very rarely forgiven, but if they are forgiven, they are income as well.
Okay.
Good to know. So, with that, I mean, and I think this is the thing everyone kind of deals with, and it's like it's a complicated topic when you're talking about like tax returns and accounting and all that. Knowing that we've seen a lot of investors start to cash out and liquidate their portfolios. 1031 exchanges have been a big topic and I don't think, and nothing's really happened with them yet, but it's been, everyone's like freaking out about like, are they going to get rid of them? Are they not? So if you're an investor thinking about liquidating your portfolio, you're just kind of sick of it. The tenants, I mean, that's been a big pain point for a lot of people because they couldn't get them out of there, and they were, tenants had a lot of protections. They basically live in homes for free for over a year. What should investors be thinking about if they're selling their properties, whether it's a 1031 or just the tax ramifications for them,
Yeah, I mean, well, the first thing is you were saying about 1031 exchanges. I mean, basically a 1031 exchange is you essentially defer the taxes. So you basically take any tax gain that you would have made, defer it, roll it into the new property, and then you don't have to pay taxes until you sell that one. It's kind of complicated, but, it basically saves you taxes in, here and now. If you're an investor and you want to cash out, I mean, there's definitely a lot of things to keep in mind. I mean, first of all, how much money, have you made with the property? Is the property made money? Does it have passive losses? Has it lost money throughout the years? Because sometimes there's suspended losses. If you make more than $150,000 and you have a rental property, you may have suspended losses. I'm talking things that you maybe don't know, or but it's something to keep in mind. And then obviously capital gains. I mean, you're going to have capital gains on the sale, so you have to pay whatever your tax rate is. So, I mean, for now it could be 15%, 20%. Pennsylvania's 3%. So you're looking anywhere from 21 to 24% on a sale, depending on if your income's greater than 400,000, you're looking more like 27, 28%. So those are things to keep in mind. I mean, obviously, when you sell a property, you need to keep in mind, what improvements did you do to the property? Do you have the receipts for that? Did you depreciate the property for tax purposes? Those are all things to keep in mind as well. But essentially, you need to, keep all that, for the cost basis for the property.
Now, is there anything out there for investors who had, properties, they have renters, and maybe there was a situation where some of their tenants, because of, different things that were put out there over the past year, maybe didn't make all of their payments and they lost money on what they should have been getting for rent?
Yeah, you mean as far as like a deduction for them not paying you rent?
Yeah.
I wish there was something like that. I mean, essentially the government says, sorry, you'll most likely have a loss on the property. So, hopefully you get to take advantage of that on your tax return.
Okay.
Or take advantage of it at some point. But yeah, that would be the only thing really.
Okay. Interesting.
So, what I'm really hearing here is that if you're thinking about doing anything like that, like you've got to talk to your accountant or an accountant. I mean, so what other things have you seen people kind of get jammed up by where they probably could have gotten advice and saved money on taxes, but it didn't happen? Because I know there's been clients that have come to me and said, well, I'm selling this property. And I said, okay, did you talk to your accountant? They said, yeah. And then they said, well, I didn't know about this 1031 exchange, or I didn't know about this. So what are some of the common mistakes you see people make that they maybe incur a large tax liability because they didn't do enough pre-planning?
Yeah, I mean, I think that's everybody's kind of guilty of this. You kind of do something and react afterwards. I mean, I guess I would say just like with anything, you'd want to consult your accountant or consult somebody before you make a transaction like that. But let's just say you don't. Ways to mitigate it would maybe if you had for example you had a large capital gain on a sale of a real estate transaction. If you had capital losses in, stock, for example, you could sell your stock and offset the loss, or you could, try to find another strategy. Obviously, it'd have to be before year end, but
sure,
you would want to talk to somebody right away if you did. Now we're in 2022, so if you did a transaction in 21, we're too late, but it's something to think about going into this year.
So so I know this time of year, like accountants, like it's like don't even talk to me until April 15th. Like we're kind of right at the beginning of that. So I appreciate you coming on. And again, Vince's website, it's paganotax.com. It's paganotax.com. So when someone's got these things coming up or they're self-employed, and we talked a lot about this. Vince was gracious enough to come to our team retreat. What are some of the things those people need to be thinking about? Maybe it's they're getting started in a new job, or they're in a real estate commission-based job, right? What are some of the things people need to be thinking about there so they're not caught having this huge tax liability at the end of the year?
Yeah, I mean, I would say, obviously talk to an accountant would be one thing to do.
You sound like us. Talk to a realtor. Right?
Another thing to do would be, to go through your transactions through the year. Helpful things are credit card statements, things like that. A lot of the credit card statements now, they categorize most of your expenses for you. So if you're self-employed, I would start there. Maybe go through your bank account, depending on how many transactions you did there. And things to keep in mind, mileage, how many miles did you drive your vehicle? Maybe you could also deduct a home office. Even if you're renting, so even if you rent from somebody else, you can deduct a home office. Obviously for realtors, their dues, things like that. But those would be the main things. And then, if you had any other travel or anything like that, or meals or, things like that. Those would be the main things.
Okay. And then, so it brought up another question that I had, and Sarah, feel free to jump in here. I don't want to do all the talking. So folks that are, they're because we still have the deadline to like put away for retirement and do those sort of things. So what are some of the recommendations you have for people that want to save for retirement and kind of take advantage of some of the tax benefits there, if you could explain that a little bit?
Yeah, I mean, I guess whether or not you're self-employed, but I mean, if you work for somebody, I mean, really, you only got whatever they're going to provide you. I guess you could do an IRA or something like that on the side. But yeah, if you're self-employed, I mean, obviously you could do a traditional IRA, which you can do up to $6,000 a year now. You could also, if you're very ambitious, you could set up what's called a 401k or solo K. If you're you're an only owner, like C schedule, so basically a self-employed owner, you can open one of those and you can put up to $20,000 a year away into there. You can also do a profit sharing as well into that. The other option would be like a SEP plan, which those are merely based off of profits. Those are really your main. I mean, there's some couple other ones, but those are the main ones people use now. I mean, the individual K is really the way you can put the most money away, being self-employed at this point, that we've found.
So if you don't really know how much you can afford to be setting aside or how much, you should be setting aside, would the best thing to do be kind of bring you, your year's end, what you made over the course of the last year, and then have you kind of guide on what to do next or what would be the most beneficial?
Well, I mean, that would be great if you had all the money saved. I mean, the problem is that people
we'll
get to the end.
That in a second. Keep
well,
going.
That's the problem is that people get to the end of the year and they don't have money. They barely have they're lucky if they have the money to pay the taxes, let alone, to make a contribution. So, I mean, I found like what I usually try to coach my clients is to try to make a habit out of it. So, even if it's $200 or $250 a month or whatever it is, just have it automatically come out of your account, at least to start.
Yeah.
And then, if you get the habit of doing that, then maybe you can do larger chunks or, maybe set up a larger fund or, do something like that. And
to avoid that, shock for the year payment there for your taxes, if you are all, commission based, is the recommendation to be doing 4 payments throughout the year? Yeah, I mean, that would be ideal. I mean, at least a couple. I mean, I try to tell my clients to do 4, but I mean, at least if you can get 2 or 3, and it's a lot better than, getting hit at the end of the year with all of it. So there isn't like a rule in place though that you have to be doing 4
well,
throughout the year?
There is a rule. I mean, if you don't pay enough in, they can penalize you. So, I mean, there is a possibility of getting a penalty, but usually they're happy to get. As long, like if they're getting their money, they're like, all right. Usually they're happy to get their money. They're just not happy when they're not getting their money.
That's a great point. And the reason we were all kind of laughing the reason I want to bring this up is a lot of realtors. If you're a realtor listening, you better start having a tax plan. Like if you're new to the business and Vince came in and talked to our team about this, we're going to be setting it up for our new agents that are coming on, and that's just an example of some of the resources we have. So if you're thinking about getting into the industry, check out realestatescholarshipprogram.com. How many times have you seen a realtor come to you and be like, I didn't pay any taxes last year, I blew all my money, or I spent it all? Like, this is a more common problem than people think.
Yeah, all the time. You're lucky if they have the receipts too, though. Like, usually they don't have any receipts, they don't know their expenses, they don't know what they paid, and they don't have any money left. So it's like the worst case scenario.
Yeah. So let's say that case comes across your desk in the next couple weeks here. I'm sure it's going to happen. What kind of coaching do you have for that person? I mean, you talked a little bit about it, but I want to get really specific because I found this is like a very industry-specific problem, but maybe in general with people that are commission-based.
Yeah, I mean, I think in general with people who are self-employed, I mean, usually, the best thing you can do is set up, some sort of accounting software. So, I mean, if it's QuickBooks, I mean, I'll plug QuickBooks because it's easy, but they have QuickBooks self-employed. Like, you just hook your account, you hook your bank account up to it, and you really just categorize your transactions. So it's like a big checkbook, essentially. So, I mean, that's something you can use. I would say to start there. As far as mileage, keeping track of mileage, I mean, they make apps for that now, too. They have Mileage IQ. I'll plug them. I mean, that's something you can just put on your cell phone, and you can do it while you're driving. So, things that you don't have to think about. The other thing is getting a business credit card or just a strictly business credit card. You put all your business transactions there, and then at the end of the year, you can just, print out the year-end summary that tells you, what you spent. Those would be some things that I'd start out telling them, you need to do this right away. I mean, and it makes your life so much easier.
Now, would you say a solid plan is every time you get a commission check, you Venmo 25% of it to your husband, who then puts it into the little tax account and sends it off, and then I also have a little spreadsheet that I just mark down my expenses on.
Yeah, I think 25% is probably good. Yeah.
Nice.
Yeah, that seems good.
Are you asking for a friend, Sarah, or
yeah,
something?
Yeah, just asking for a friend.
So, you bring up a couple good points, and when it comes to the business credit cards, if you get, I mean, there's a lot of them out there that, I mean, you can get like unlimited 2% cash back, you can get a lot of benefits with them, and it's just an easy way to keep track of it so you're not thinking about it. So, we've got like 4 or 5 minutes left here. So, what kind of, accounting advice do you have for people that are listening? And our audience is typically like real estate consumers, people interested in real estate, or anything else we should know about you and your firm here, because we covered a lot. I feel like this was like almost like a police line up here with all the questions we asked. So,
yeah, I mean, I guess any other things that we didn't cover, I mean, I guess just specifically, and we did talk a little bit about the child tax credits.
Yep.
But just to go back over them, I mean, anybody who made less than $150,000, you would qualify for those. So for the increased credits just for 2021. So if you have any children that were from age 6 to 17, it's $3,000. Any kids under age 6, it's $3,600. So you would have actually received half of those payments up front, assuming the government did it properly. In your case, you should have received half of those up front, and then you'll get the other half when you file your taxes. So that's why I brought up about the letter, making sure you have the letter, because the letter does kind of outline that, and you need that to do your tax return. Just some other things. I mean, I guess we talked about, sales of homes. Mm-hmm. So one thing to keep in mind when you sell your home. So if you were in your home for 2 of the last 5 years and you made it your primary residence, you qualify for an exclusion. So if you're a single individual, it's $250,000 capital gain exclusion. If you're a married filing joint, it's $500,000 exclusion. And that's not on the sales price, that's on the gain. So if you bought
what
something,
does that mean?
Yeah, so if you bought something for $500,000 and you sell it for $1 million, and you're married filing joint, you're not going to pay any taxes on that. You're going to, the $500,000 will be tax free.
That's a great point, because a lot of people don't realize that, and that's one thing like we have to advise folks on all the time, because that's one of the forms they'll sign at settlement is, this is true, the gain is less than this, I'm married, it's the 1099 exemption form. So that's a really great point. Is that something you feel like people just don't even know about when they? It just seems like a lot of this stuff, like you'd think people would know, but I found that in our business, and probably yours too, is that most people have no idea.
Yeah, I mean, unless you do it every day, I mean, there's just a lot of people that don't know. Unless you deal with real estate, or you're dealing with the consumers like that, they're not gonna know. They just don't know.
Well, that's why we have you on, man. So this is great. So anything else you want to add here? We got about a minute and a half left, and Sarah, you got any other questions?
I guess as you're getting all of your accounts together and you're getting ready to go to your accountant, For different write-offs, if you have everything in, a spreadsheet and documented, like categorized, do you also want somebody to be bringing in the receipts or?
Yeah, the receipts are for you. So I would just tell anybody that when they go to see their accountant doesn't want the receipts. At least most accountants don't. I mean,
I don't want you showing up with a shoebox filled with all your receipts from the year.
I mean, I would take let's put it this way. The accountant's going to take your word for it, assuming, you have the spreadsheet. And then those receipts are just in case you get audited. I mean, that's all they're for. And you should keep those for at least, 4 to 7 years, they tell you now. So if you're self-employed.
Okay.
So make it 7, play it safe. You can find Vince. We're getting played out here. It's like the Oscars. It's paganotax.com, Pagano tax.com. Vince, thanks for coming on. Really informative segment.
Thanks for having me.
You want to follow Sarah? She's on Instagram. It's at Ty_Ty_Time, TY_TYTIME. You can follow me at Tom Toole 3RD, at Tom Toole 3rd on Instagram. You can follow the show, YouTube, Instagram, Facebook. Just Google Tom Toole Sales Group. And we'll be back next week. This is Toole Time Real Estate Radio on WWDB 860 AM.